Want your brand to be seen and be remembered? Effective campaigns need both. JCDecau's high-quality billboard sites in premium locations nationwide offer brands powerful and visible stages for emotive, impactful and influential storytelling. Find out how JCDecau can help your brand be seen and be remembered at www.beseenberemembered.co.nz. No mai, hoki mai, kia default, e mihi nei, ko Duncan Greive tōku ingoa. My guest today is Sophie Moloney, two CEOs back to back. She is the CEO of Sky. Sophie's a lawyer by training. She joined the business in 2018, around the time that John Follett, a true legend of television in this country, he was finishing up his epic 17-year run leading Sky. Within 2 years, she was elevated to lead it herself. There was a sort of a somewhat erratic 2-year interregnum from Martin Stewart, who was here and gone fairly quickly. And she arrived at the business in quite a tricky moment for it. For decades, Sky had been one of our most valuable and profitable corporates. But by 2020, streaming had well and truly arrived. And not only that, but Spark Sport was behaving very aggressively in the market. It looked a formidable competitor that might, really challenge, potentially existentially challenge Sky. Her early years coincided with the pandemic, which played havoc with sports. And the rights to sports are basically Sky's core business, certainly the most important part of its content portfolio. That's what people pay for with Sky. Its technology is aging. That's probably still true to an extent. It had lost the local cricket rights to Spark Sports just when the New Zealand cricket team was hitting a very purple patch. And the rugby rights deal, which it did sign, was so costly that it really did hamstring them a bit in terms of their profitability. They even had to give away a percentage of the company to New Zealand Rugby in that deal. And her early years were not without their issues. There was an attempt to buy Mediaworks that sort of fell apart after a shareholder revolt in 2022. And even as recently as the start of this year, it wasn't plain sailing. There was an Optus satellite, which is still how 62% of their customers by revenue get their Sky product, and a significant proportion of those were, as the satellite sort of entered its end of life period ahead of schedule, they weren't getting it, and that became a sort of an ongoing social media and news media story that ran for months. However, and that's probably why we didn't get the Sophie Moloney interview earlier this year. We've got it now, and we've got it now because she's turned it around in a pretty impressive way. They won back the local cricket rights. Just a few weeks ago, they bought WBD's local TV assets, chiefly 3 and 3 Now, for the knockdown price of $1, which now, under the auspices of Sky Free, gives her the sort of the second biggest local free-to-air TV platform in the country. And then just last week, in fact, just hours before their annual results, they announced that they had renewed the NZ rugby deal. The terms haven't been disclosed. Conjecture is in the sort of $75 to $85 million a year range, but any way you cut it, it's a significant step down from what they were paying for the previous 5-year rights cycle. But not only that, it's just better stuff. There's the Nations Cup, there is a big old school South African rugby tour, there's Lions, it's just a really, really good looking rugby slate that, and they're paying less for it. Their share price this year, perhaps as a result of all that, is actually up double digits in what is a broadly flat local market. So it seemed like a great time to have Sophie Moloney, the CEO of Sky, on the fold to talk about the challenges and of her time, but also how the company has started to turn around. Tēnā koe, Sophie Moloney, welcome to the fold.
Kia ora, Duncan. My pleasure to be here. It's been a long time coming, I think.
It has. We've been dancing around it for a while, but it's a very opportune time to be doing it with last week's big news. Just before we get into that deal, I wondered if you could give me a sense of, you put out your annual report last week. What do you think the story it tells your investors is?
Yeah, so look, it has been an incredibly challenging period, but equally really rewarding in terms of we put out 3-year targets in FY23, and even though revenue and our EBITDA margin are not quite where we want them to be, we are delivering on programming as a percentage of revenue. We're delivering on CapEx, employee engagement, and perhaps most importantly for our investors, the 30-cent divvy that we said we were going to double the dividend. It was quite a bold call.
Quite
back
bold.
in FY23, and to actually be able to deliver on that this financial year, I think reflects the hard work and resilience of the team and that really determined focus on cost and still delivering for customers too. So overall, our investors, we're in our roadshow at the moment, are appreciating that because they know the market's really tough. And so I'm really proud of what we've actually delivered. A lot more to come, but no doubt we'll come to that.
Yeah, absolutely. I want to sort of pick at some of those pieces along the way, but let's start with the rugby deal because that's perpetually for Sky the sort of the heart of it all. The announcement came literally, I think, a couple of hours before the annual report came out. How close to the line was the signing of it? I saw yesterday pictures of Bailey Mackey, who was negotiating on the rugby side. I think he looked like he was at like Taika's birthday party in Greece, and while everyone around him's having a great time, he's on his phone, potentially with you. How did that kind of come through in relation to your big announcement?
Yeah, so look, it really was 7:32 a.m. on the morning.
That's when the ink went on the contract. Amazing.
And so Bailey, he did an outstanding job hustling, as he does, Bailey, to ensure that all of the approvals are in place. But, it is a very important deal. We obviously, as a listed company, have to put out our accounts. We have a chairman's letter. We have my letter as chief executive. So I had a call with our disclosure committee, our auditors. So that's why it took a little bit longer to get our results out because we just had to make sure everything was tabulated correctly, given that the rugby deal was ready to be announced. So it wasn't, I think Chris Keel sort of said to me, was that all pre-planned? It certainly wasn't. It was right down to the wire. But we're absolutely thrilled to have now inked that deal, which really sets us up for the next 5 years and all of our customers enjoying amazing All Blacks and Black Ferns content.
So let's talk about the content because, I've been speaking to New Zealand Rugby throughout this process as well, and they were adamant that this is basically the best slate of rugby with the Nations Cup. Is that the new competition coming in? Lions tour, an old school sort of South African tour. It's as a bundle, it's completely unlike anything we've seen in recent times, and you got it for a lot less money than you've been paying for the previous deal. And didn't have to give away part of the company to get it signed. How different is this kind of commercial environment to be negotiating into? Because sports rights internationally, they're not going down; they're going up for the most part.
There are some examples where they're going down. I mean, you're spot on. It is a phenomenal slate of content, and we absolutely valued it up based on our data to ensure we're putting forward a really robust offer for New Zealand Rugby. The context of the last deal, you're right, was highly competitive. And the reality, Duncan, was that the price we paid wasn't actually about the value that we could actually redeem from our customers to support it. It was the price that the market dictated, and we were in a very different place and very determined since then to make sure by the time this renewal came around, we were very clear about what we could put down and be prepared, quite frankly, to not renew tranches of the deal if we couldn't afford to. Over that period, we have massively had to go at our cost base. We've had to make big changes, move into outsourcing, all to make sure we could still deliver on the contract. And so in the context of this deal, we still think it's an incredibly robust offer that reflects the value. And for the context of that, we have to get shareholder approval. The reason we need to get shareholder approval is worth more than 50% of our market cap. And our market cap is currently around 400 million. So it's still a very robust deal. And if you think about the numbers being quoted, and I'm not going to confirm those, they are commercially sensitive, it's a huge amount of money, which does reflect that awesome slate of content. And we're just thrilled to be able to deliver it for our customers over the next 5 years. But of course, the TVNZ free-to-air partnership, we think is a great move by New Zealand Rugby, showcasing the provincial rugby to more New Zealanders. We already did do quite a lot free-to-air on Prime and then Sky Open, but obviously TV1 is the juggernaut. So, I think that's a great component of the deal and does show that we're really prepared to be co-exclusive, as we've said, or non-exclusive on certain content and only put down the premium where the exclusivity makes sense.
That TVNZ piece of it, they have been a rival at times, certainly when they took over the Spark Sport assets, especially around cricket, that represented quite an incursion into your territory. And obviously you'd have just been bidding very vigorously, I would imagine, for the FIFA package, which including the World Cup, which they just took out. How do you... And now you're much closer to them as well through Three. How do you imagine that sort of competition with cooperation thing is likely to play out?
We've definitely got cooperation around talking about things like Think TV, which is all about celebrating the benefits of TV advertising and for brands in particular. So that's a place that we will absolutely continue to collaborate. But yes, we will compete. I would have loved to have won the FIFA World Cup rights, but we do have an incredible slate of football from the A-Leagues with AFC, obviously, right through to the Premier League. So I imagine going forward, it will be more competitive. 3 and 3 Now are a pretty impressive couple of brands, which have a much more diverse audience than what we have on the Sky side. So we do think that's going to put us in a good place. But we'll only secure rights where we can return a margin. It's super important that we get that mix right.
I mean, one of the rights that you have passed on or haven't come to you recently is netball, which has gone to TVNZ in a deal which looks like the production side won't necessarily be sitting with them. Why was that something you were willing to kind of let go when it has historically been a big part of Sky's portfolio and is a very important women's sport, and you seem to have a very deep personal investment in that area? Yeah,
so look, that's we had long discussions with New Zealand Netball, but we recognise it is time for them to look at their model. And obviously the value that we could put forward didn't get us to a deal for 2026. You're right, it's a phenomenal participation sport, and we obviously still have the Silver Ferns. But I actually think that Jenny and her team are on the right path of thinking about how do they change their monetisation model? How do they lean into that audience that they have and think about flipping from broadcast into sponsorship in a place where they've got a unique audience to serve? So, for us, it was about the value that we could see. And I was sorry we couldn't get to a deal with New Zealand Netball. I think it is a super important sport that will continue to thrive. But we also have a heap of other women's sport on our platform, and obviously, partnering with the New Zealand Warriors this year to bring back the women's team, which is exciting. The team are learning their craft, and so there's still a lot of women's sport that we celebrate and support. And obviously, seeing our Black Ferns up in the UK doing what they do best is pretty cool to be able to share with all of New Zealand.
So let's talk about the Warriors, because they have been on a real tear over the last few years. Results have come and gone, but the fan engagement has been like nothing else. And you've also seen Auckland FC enter the market with a similar kind of level of intensity and sellout crowds and all the rest of it. It's interesting, right? And I'd love your view on how these two franchises, which are part of Australian leagues, are able to generate a level of fandom that rugby doesn't seem to be able to, outside of the All Blacks. In terms of this city we're in right now, the biggest in the country, it feels like Auckland FC and the Warriors know how to work that thing better than rugby at the moment. Warriors are on the cover of your annual report, which sort of seems instructive on some level too. I just wondered if you kind of had a sense of, why that's happening and how you see it flowing down into Sky's relationship with those teams.
Yeah, so look, I think they're definitely about fan first. I think AFC have been super smart about the way they've gone about coming into the market and thinking about the different audiences they want to attract and thinking about places where you can, go and have fun in the port, but still have family-friendly areas. I think they've been incredibly smart and what an amazing season. You're absolutely spot on with the Warriors. They're on a amazing growth path in terms of the fandom. And you're right, it's almost like the results don't matter, or the way that they might win or lose is what fans really care about. And so I think Cam George would be great to bring on here and have a chat with you about it. But I think they've been, again, really, really smart about being fan-focused. They're about growing pathways for players. And overall, the NRL is a phenomenal competition. Why? Because you don't know who's going to win. I mean, it's incredibly difficult. My husband does a bit of betting on it each round. And by about
Apologies
game
for your
3...
bank accounts.
Yeah, so round 3, it's... No, I didn't pick it. So, that's what fans like, right? You want to kind of know, are we going to win or not? And on Saturday night, had this lovely moment. I'm watching with my family at home. My mum and my sister were on our WhatsApp group. They're both up in Tamaki. I'm down in Whakatū. And it was just this really cool moment of sharing the Warriors. And my mum's become a Warriors fan. She was never a league fan, but that's the nature of the way they play and the way they show up. But also, I just think they've got the right ingredients around that fan-centric approach. There's something going on, though, to sell out crowds, have more crowds than home crowds over in Oz with Warriors fans. It's pretty phenomenal.
Yeah, it's a very impressive thing to witness. Especially, it's almost the away games are more impressive than the home games in terms of the way that they've been able to kind of create what would have been a latent fan base in other territories.
And, from a sponsorship perspective, seeing that's one where we've seen Sky, along with Moana Pacifica, we've seen the Sky kind of emblazoned, and the Women's Warriors. The Warriors is a phenomenal sponsorship because that kit gets bought out really fast all the time, and you see it being worn around the country and across in Oz, which again reflects that, that fandom that they have.
So thinking about the kind of competitive landscape, as we discussed earlier, when the last rugby deal was signed, you had Spark Sport looking like they were heavily committed. Turned out that was a fairly short-term thing. There's been talk of DAZN coming into the market, though so far just talk. TVNZ with this FIFA win and moving into, I think, both pay-per-view and some kind of pay packages. What's your view of that? I mean, because part of the verdict on Sky that has seen some of the investor value erosion over the past decade is that there is too much competition. You'll have to pay too much for rights and won't be able to, and people's kind of wallets are spread too thin across various sort of streaming platforms. Do you feel like you're through that? Are you concerned about TVNZ? What's going on there?
Yeah, I mean, I think Spark Sport, on any metric financially, we shouldn't have won that battle, right? But we're really determined around our content, and winning the league back in 21 was super important. And, that's testament to the board and our strategy and delivery. Where are we now? Yeah, I think it's great to have another local player who can.
Really?
Yeah, I do, because it's not necessarily for Sky customers, because that's who it is. These are New Zealanders who give us their money, and we then say, right, how are we going to deploy this to be there for every single sport? So I think that's really healthy. But you're spot on. There are other players, right? BN is here. You've got DAZN. You've got ESPN.
Part of the Disney Plus package.
And we have channels, and so it's an ever-evolving landscape. What I can say is that there is a real power in our sport bundle, and that's really what the investors own, and we're really keen to continue to nurture. And we manage that because we don't have deals that terminate at the same time. We buy across genres in sport and entertainment. And we're really disciplined, though, in looking at the data and working out what's the amount we can put down to reserve our firepower if we need to. But equally, it's a vibrant landscape. What I can safely say is we know the bundle of sport we offer, and for sports to want to be alongside other sports, because that's the easiest way to get that connection and have that working. So when you think about rugby league, yes, we'll have the cricket, we've got golf, we've got some of the tennis, but also motorsport is a super important part of that bundle. And you can't actually unbundle it. You can't pirate it readily unless you're incredibly determined. So that's really where the value is. So from my perspective, if someone wants to come into this market who's a big streamer with big deep pockets, they should probably look at buying Sky. I mean, that's the best way to get access to that sport rather than trying to
just chisel
build
away
it out over 10 years without any guaranteed revenues. When you think of our business still, even though our share price has had some appreciation, we're still undervalued. So that bundle of sport that we have, coupled with the entertainment, and this is the other aspect, people look at, think about standalone sports streaming, as Spark found out the hard way. It's really challenging to turn that into a revenue model because you can't just have stuff at the weekend, particularly in a streaming environment. With a box or remote in the home, tend to be stickier. Apps, we've all learnt it, right? We've all learnt to switch on and off. We cycle through, and that's a big interruption to that revenue model. So it's a long way of saying we've worked really hard. We see that as a really vibrant part of our business with entertainment alongside to make sure customers are readily using the product every day. So it's a long way of saying, yes, it's always going to keep being competitive, but we know what the value is because we know what customers are watching. We're not asking them what they're watching. We can see it. We have the data, and then we work out exactly what we can put forward. And it's all about trying to get to a place of having a sustainably profitable business. And I think FY26 is the year that we're going to be able to look at integrating Sky Free, and we can come on to that, but making sure we're set up for that future. And we can be making sure we're investing in our technology, in our customer experience, in our people, as well as with our sport partners, because ultimately it's about trying to deliver the best entertainment and sport for New Zealanders. It's really simple at its core.
So you said before that if they wanted to come into the market, the smart thing to do is to buy Sky. There's
I'm not saying that anyone is, by the way.
Well,
I'm just saying.
Have you had conversations though?
No.
So no, even informal approaches.
No. If we're a listed company, Duncan, if there was something formal.
But if it was, it was a bit more informal, just down the pub.
No,
okay.
I'm just. The other thing about it is, as is talked about, and I think it's been written about of late, we are a small market at the bottom of the world.
Yeah.
We punch above our weight in many, many respects. But the streaming wars have kind of happened. They've kind of done. Netflix has won that, really. You've still got HBO Max and you've got Disney thinking about ESPN. But in this market, I think we've kind of lived through that massive change. We've come through a big competitive landscape on sport. But I do want people to understand we're still fair valuing sports to reflect the revenue that we receive and to deliver the great experience, including all of the amazing shoulder content that we put around content. We've seen a great uplift in people watching our pre-game shows for the All Blacks. And some of the stats around the All Blacks of late are world leading. And I think this next test match against South Africa on the 6th of September may be the biggest viewing audience we've ever had. And there will be delayed coverage of that on Sky Open to make sure that it's as widely available as possible. So, I think it's an exciting time, but all I'm saying is when I look at the value of Sky and the competitive landscape we've come through, I just think that sport bundle is something that our investors have supported us in investing in, and obviously we're repaying that with the dividends that we're going to be paying back this year. But it's all about trying to strike the right balance between that investment and all of those different outcomes you're going after.
The JC Billboard network delivers quality reach via commanding sites to ensure your campaign is visible and impactful. With superior screen quality and premium locations, JC can help your campaign be seen and be remembered. Visit www.beseenberemembered.co.nz to learn more. Yeah, it's interesting. Right? I mean, there's a lot to unpack there. There was a period, it felt like, where the super low interest rate environment and the assumption that these sort of giant global streamers would be able to kind of colonize the world, as you say, with the exception of Netflix, that doesn't look like the future that we're going into now. Most of them are fairly chastened and are reducing spending as fast as they can. So I guess, and Sky, because of their sort of durability and the kind of customer databases and customer relationships that you've had over a very long period of time now, looks like a better retailer of that content than trying to come in and build from scratch. I'm curious about the sort of investor view. There was a period of time, Sky used to be one of the biggest companies on the local market, and it felt like the blink of an eye, the narrative flipped to this is a sunset business, and there was people making pretty negative predictions about the future. Do you feel like when you speak to investors, when you roadshow now, that that narrative has turned around, and what do you put that down to?
Yeah, I think we're definitely, I'm probably, in terms of the investor base, a couple of the biggest shareholders we have that I'm really proud about, ACC and NZ Super Fund, have grown over that period. I still remember the first meeting I had as chief executive back in late 2020 with representatives of the time of ACC, and it was pretty brutal because they were very unhappy with where we were at as a company in terms of having signed up to a deal that was pretty impressive in terms of the rugby deal. We had a $100 million bond to repay, and we had to go through a deeply discounted capital raise to make sure the company could get itself back to a place of equilibrium. And we have really been on a determined journey to get to this renewal and still deliver for investors. So I think that we've been asking the investor community to mark our homework. Not many companies go out and put out targets like we did across a number of those key metrics. The 47 to 49% of revenue, so if revenue comes down, so does your spend, was a really important signal, because you're right, when you look back at Sky's history, when the EBITDA margin, when the programming as a percentage of revenue was about 45%, we went up to about 52, 53. The EBITDA margin as a correlation was 25%. We're sitting at about 19% at the moment. I think that an EBITDA margin of north of 20, less than 30 is a good place for a company like ours to be, because it gives you flexibility to adjust and think about where you invest. So for our investors, they've seen that journey. We've owned it when we haven't got it right. We can talk about the new Sky experience and the learnings from that. And when Migrate happened, we went out and we communicated really clearly. So that transparency, and we share a lot of information, right? I always remember Dame Joan Withers, when I first got the gig, saying to me, if you can do stuff in the listed environment, you can probably do it anywhere, because the level of scrutiny you'll get is pretty impressive. So our investors, and I talk about ACC and NZ Super because they're super important investment operators here, and they're mum and dad investors, they're KiwiSaver funds. They've seen that we've said we're going to do things and we deliver on it. And that's why when I said at the outset, delivering on that 30-cent dividend this year, I'm incredibly proud, because it is through determination and hard work of the team, and it hasn't been easy. No. But that's the trust and confidence that you build through continuing to deliver. But it's been a really tough 5 years.
Yeah, and it does feel like there were periods, with the Mediaworks deal, with the Optus satellite issues, where it must have felt quite thankless. Now to be in a period where you're having a really different kind of conversation. We've talked about the rugby deal. The other big transaction recently was far less costly, but potentially if not as significant, still very a major change for Sky, and that's the acquisition of Three now, the WBD assets. Tell us what's the motive there, and how it's very early, but how the sort of digesting of that is going.
Yeah, so strategically we've made, we've been very clear that we want to go after advertising. We saw it as a ready adjacency to go after with our content, and through Lauren and the team, they've done a phenomenal job over the last 2.5 years of getting us on the map, or back on the map. We were sort of called the sleeping giant, and I think the sales team of the year at the Beacons, it was kind of like the giant's woken up. It was pretty cool. And so strategically, when this opportunity presented itself, provided the price was right and the structure of the deal made sense, it was a bit of a no-brainer for us because it's a completely complementary asset.
You think the price was right? You don't think you overpaid?
Sometimes timing is important, but yeah, $1, as I said at the time though, that doesn't mean that it's a profitable business. You don't get things for $1 that are.
No.
But the structuring of the deal is going to give us a great opportunity. But the reason I'm really excited is that the audience that we get with this, an 87% incremental uplift in 18 to 24, I think it is, 85% more females coming through Three and Three Now. That's a phenomenal audience opportunity for us and our partners. Equally, when we look at the content slate, we're obviously strong in sport and in drama, reality, news. No, we do pass-through news. So when you put those two things together, along with the fact we didn't have a BVOD platform. We didn't have a free digital place to play, and it was a bit of a concern for the advertising team because they were feeling like they weren't able to show up as they would like. So to get Three Now, an existing brand with audience, without having to build the platform, build the audience, brand it, pay for all the content up front, that's a massive, massive opportunity for us. So, and then overall, I look at it and go, what an opportunity in the market to bring together two iconic brands. Sky and Three are both 35 years old this year. And it's been fascinating to me to see the reaction. It's probably the first time since I've been at Sky in New Zealand that I've had a sense of people going, that's cool. Sky's done that. That's really cool because we deliver all these amazing sport experiences. Like the Olympics last year was phenomenal. But then there's this kind of almost like, oh, well, of
that's
course
what
they
they're
should do
supposed
it.
to do. Yeah,
of course they should
absolutely.
do it.
This is something different.
Yeah, so it was exciting to have that feeling for the team as well that actually we're here and of this country, we always have been. We have New Zealand customers, we're staffed by Kiwis, we deliver these moments around the country and through Sky Originals, not just on the sporting field. So now to do that with Three and Three Now and the rest of the linear channels under Juliet Peterson's leadership, I'm excited about that opportunity.
Thinking about, you now have two free-to-air channels, including, Three is much bigger in terms of the consciousness, has better placement on EPGs and so on. How will you go about differentiating them? And have you had, conversations about putting sport into both categories? What's the thinking there in terms of how you'll develop Three as a Sky property as opposed to a sort of an independent entity?
Well, as always, it just starts with the customers and who the audiences are and making sure that we're really clear with each channel who the audience is and delivering the best experience for them. And I talked about the role that Sky Open has played and Prime before that. It's been super important in our ecosystem, but we've been asking it to do a lot. When you put sport on and then you've got lifestyle, you're not necessarily curating a channel for an audience. So I think that's the opportunity in front of us. The other part of it is with sport is because we already do quite a lot of free-to-air sport, but we don't necessarily get the credit for it. I think we will in a Three Now mode, if you like, or in that ecosystem. But the key thing is, again, just about where's the right place for that content. So MotoGP, NASCAR, SailGP are part of the Three stable. That's great. I don't see a need for that to change in the near term. But of course, we'll have a look at it and think about what's the right role. Is this more of a free-to-air sponsorship play, or is it really a subscription product, and therefore we should be putting it into the Sky Sport pack? Way too early to say we're going to do X, Y, Z, but of course that's going to be a conversation. But ultimately, as you know, with what you do, it's all about audience and making sure that we're not disrupting the joyous audience that sit on 3 and 3 Now. It's only about, for now, looking to augment and strengthen. And that's why we're not looking to change anything, unless there's an opportunity, particularly with 3 Now in the near term, because we don't have that BVOD platform. But otherwise, the Sky Open schedule is staying as it is.
Thinking about, you mentioned before you'd had news, but only as a sort of a pass-through and largely international. Now you've got a 6 p.m. news bulletin made by Stuff. How is the relationship with Stuff going? Because they're now, a partner of yours as well. And, there has been ratings decline there, as you'd expect when you go from resourcing it at the level that News Hub had to the Stuff level. And do you see news as now more core to the Sky offer in a local context, or are you sort of happy with the level of kind of investment and expression there?
Oh, I think Sinead and the team obviously have done an excellent job with Stuff, and we're excited about that continuing contract. No doubt Juliet and her team, who are skilled in this experience and, in this part of the world, are going to be having a good look at that now that we've got this acquisition and we can start to, plan forward with how the investments might work. Look, we think choice for New Zealanders around local news is super important. So we're not going to be shying away from that. And if there's an opportunity to help improve those ratings, we will certainly be looking to support that.
Juliet is, has come across with 3. Often an executive like that will sort of help with the initial kind of tying together and then go away. So far it looks like she's going the opposite way. She's been given a very big job, which is running not just free-to-air, but also the commercial side of the business, because Lauren, who had done a very good job on the numbers, is exiting the business just weeks after that win at the Beacons. How confident are you that the momentum that you've got in advertising can be maintained with all that Juliet has to digest with that new role?
Yeah, so spot on. There's a big job there, and it's very exciting that she's taken over the mantle, if you like, from Lauren. Lauren isn't going anywhere. She's providing support for the rest of the year to Juliet direct. So I'm thrilled about that, to have someone of her acumen still supporting Juliet directly. And the focus of the team is not to disrupt any of the revenue plays that we have, but I'm highly confident that Juliet and the team are going to do a great job, because they're feeling pretty energised, right? TVNZ has been the juggernaut, has been the biggest earner on the linear stage in terms of that linear revenue for some time, even though audience share is sort of similar. So there's a real opportunity there as the teams come together, acknowledging that some of the Sky upside has come at the cost of 3. We're really alive to that. So it's a great opportunity. For now, though, it's about not disrupting any of those audiences we have, and obviously the advertising community, super important. But going forward, when we think about it, we think we're going to have a really compelling offer right across the ecosystem. So, and I know Juliet's excited to be cracking on with that.
Looking at the exec team, I was looking at this morning, there's quite a few people with interim in their title, and there has been some turnover there over the past year. What do you put that down to? And, is the sort of the pace of change within the business kind of pushing people beyond their limits? Or, how close are you to getting a more kind of stable team around you that you can kind of push into these sort of next phases of integration and exploiting these assets that you now have?
Yeah, look, I think with the announcement of Nikki Goodman coming in as our Chief Customer Officer, and Rose done a phenomenal job. We'll be doing a handover in the coming months. That's very exciting. From Chief Financial Officer David Mackerel coming across from NZME in January. Again, Andrew Hurst is a phenomenal supporter of Sky. He's done a great job for us, so he'll be doing a handover there. So that leaves, if you like, in terms of my executive team, with Johnny having gone off to the Olympics, there's a content role there, but at the moment Kim Niblock is looking after that. She's got great experience at Lightbox, as you might recall, but came across from TVNZ, and Juliet was at TVNZ, started out at TV3. So I feel like we've got a plethora of talent. I'm super excited about the team we now have. I'm a massive proponent of teamwork, and more broadly, when I look at our senior leadership team and actually all of our crew, the discretionary effort that they put in, because it's not all about the rem and media, as you might know. If you want big remuneration, you're probably better to go off to a bank or a telco, potentially, in the longer run. However, the joy of what we get to do in terms of our purpose of sharing stories, possibilities and joy, and the effort the team put in during Migrate was absolutely phenomenal. And I acknowledge that and will continue to do so, that discretionary effort. But do I think I've now got a team that I think are going to help us continue into the future and really thrive? Yeah, absolutely, I do. And my job is to make sure that they've got all the support they need to be empowered to, not get in their way. And I'm looking forward to that too, because it's, I remember when I became a chief executive close to 5 years ago, people would say, oh, it's lonely. And I'd be like, what? How can it be lonely? What an awesome job. What I do recognise, though, is it can be a bit isolating, and to have a great team that are going to be there and be able to pick up the mantle is super important. So, I'm excited. And, change happens, right, for all sorts of reasons. But I'm really hopeful that this will be the team, and we're going to have a lot of fun going forward.
You made reference before to that satellite migration happened ahead of schedule, and certainly not in a way you would have scripted if you could have. What was the impact on Sky of that? Because for a minute there, it felt like it was just an incredibly hot, troubling situation for customers and certainly for you as well. You're on the 6 o'clock news, not for announcing a big deal, but I know that you enjoyed the way that interview was set up. Just talk through how that impacted and have you been able to, like those customers who were paying for something they weren't getting, it's just not great. How many of them have you lost? Have you kind of been able to rebuild that relationship? What's been the net impact of all that?
Yeah, look, it was a huge impact and it was existential, right? It's still 62% of our revenue coming through our box business, down from 78 a few years ago. But so we absolutely had to just focus on ensuring with Optus that we could deliver for customers. And we did lose some customers. We talk about the fact in pay TV, you don't ever want to wake up the base all at once. And we certainly had to do that because we had to communicate. We had to talk about a Hello Satellite campaign. Again, for me, I really didn't want people to be talking about how we deliver stuff. It's more about what's in front of you on the screen. So when you put that together, it was a really heady mix. We learnt a lot. We now monitor satellite signal with all of our, especially our new Sky Experience boxes around the country. We can measure that. If there are any concerns, we can be communicating with Optus and just making sure that we are able to deliver. I think as a team, we came together with a singular focus and it was incredibly galvanising. And so as we come into the acquisition of Sky Free, as it's now called, I know that we're match fit. We've got a heap of technology work to do this year to transition out of the Warner Brothers Discovery technology systems into our own. But on the customer front, since we completed the migration, our Net Promoter Score has been improving because the demand has dropped off. We're re-engaging. However, Duncan, you're spot on. We want to try and get those customers back. We did give credits and campaigns to support customers, and we need to get back on top of that. But equally, it's at a time where the economy in New Zealand and New Zealanders are really struggling. Like the pressure on household wallets is phenomenal. And, I keep reminding that we want to deliver and meet customers where they are. We have some customers who have switched off broadband because they can't afford it, and they're choosing to take satellite only from Sky to have their sport. So we're the choice of entertainment in that home, And if you think about the delivery of our sport bundle, and because satellite cost is built in, right? You don't pay separately for that. They can get that now for $60 or $70 for the month, and that's become their singular choice. So people are doing it tough and they're making choices. And so what did we learn? We learned that we can come together as a team and solve issues. We also learned that we need to invest again in our customers and their experience, but I'm really thrilled to say that we're already seeing a significant improvement in our net promoter scores across the base.
I mean, one thing that is manifestly true of Sky is that it's a content business, but it's also a technology business. And it has what looks outwardly to be a tremendously complex web of products. You know, you have multiple Sky Boxes in market, you have the Puck, you have Sky Go, you have Neon, you have Sky Sport Now, you now have 3 Now, and I know that I'm missing some. Is there a rationalization coming? Like, do you have your eyes on or over the horizon at something where, because the irony is your biggest competitor in many senses, or the one that won streaming, kind of has one product. Now, I'm sure that the way it shows up in different environments will be much more complex than that. But the customer experience side of Netflix is it just works wherever it goes, so long as you're paying for it. I have to say, with the new Sky Box, which I switched over to, there are some aspects of it which are fantastic. Other things which seem like they work less well than my previous Sky Box around, starting a live
Hope you've seen some improvements, but you should send them through because we're now back onto our release schedule. Post-project migrate, we're now fixing
tense
issues.
to be using you as the world's most highly remunerated customer service operator. That wasn't my intention. But I am thinking about that whole suite and whether there's a way of, over time, kind of bringing that into a place that's easier to maintain and potentially a better customer experience. I'm sure that's desirable on multiple levels.
It totally is, and that's what we're excited about in this financial year, is to basically take stock, have a look at, we obviously need to prioritise the integration with Sky Free. So that's super important, first and foremost. But yes, you're spot on. What we want to be able to do is make it as seamless and easy for customers as possible. At the core of that is customer data and ensuring that even if it's different shop fronts that you're engaging with, we do understand who you are, how we can serve you best. And so that is definitely part of the roadmap. As is, I don't know if you did talk about Sky Go, but the platform that powers the new Sky experience, similar to Sky Go and the pod, I see a future where obviously we'll have Sky as an app, and that means that you'll consume through a connected TV, and we'll think about in future, do we still need to have multiple brands? What's the best way? Ultimately, it's about what's the best way to deliver for customers, and you're spot on. We need to make sure we're being as cost effective as we can. With AI and the rapid evolution of that, we are already utilising AI in our contact centre, helping our teams to triage. Super important. And for each of my execs, I'm saying you've got to know enough about AI and think about how can we start to utilise it. But Kim Niblock, Chief Digital and Tech Officer, has phenomenal experience. She's very alive to that opportunity. But at the same time, we don't want to disrupt the viewing experience. So it's
That's the tricky part, right?
That's the tricky part. But, when we acquired Lightbox, we migrated it into Neon. That was an awesome delivery many years ago now. Feels like a bit of a distant memory, doesn't it?
But you're still using the Lightbox platform for Neon, is that correct?
Yeah, so, it's had some evolution. But, there are a lot of excellent technology partners out there. And the key thing for us is, what I say to the team is we don't want to build things unnecessarily. There are technology partners we can partner with to deliver. So yes, you're spot on. That's going to be part of our strategic thinking going forward, is how do we solve for some of those issues that we've had. And there is some tech debt on the broadcast side that we just need to go on and fix. But we see the opportunity through our 7 to 9% of CapEx to continue to deliver on that and deliver for shareholders. And obviously, as we've done today, we'll be upfront about what we're looking to do. But partnering with technology expertise is definitely part of that. I think those days of building it all yourself need to be long gone. That said, our broadcast infrastructure, we have some of the most highly skilled people in this part of the world delivering on that, and we saw it come through with Project Migrate. They were absolutely phenomenal in how they solved many of the issues that we were dealing with.
So, just to conclude, Sky, you've talked about with the acquisition of 3, that sort of makes concrete in some way something that I think has been a hallmark of your term, that of wanting to make it more clear that Sky is a local media company, by some metrics our biggest, and certainly that wasn't the way it felt. Give it sort of 10 years or so ago, Sky was suing the Herald and stuff. It felt it's isolated out in Panmure in a way. Panmure, Penrose,
Penrose, yeah.
Close
Panorama Road, Pan Road. There you go. Yeah. That it kind of just did its thing, and it didn't need to engage too much. It was a juggernaut, so maybe that was appropriate for the time, but more of a sense of being, you shifted the head office into the city. What does the future hold in terms of that being in the local environment more and expressing that in different ways? Well, just continue strengthening. We're doing a lot from a Te Ao Māori perspective, and Te Reo Māori commentary. It's been phenomenal what we're seeing come through. Te Tauta Whiri, the Māori Language Commission's a really important partnership. We're partnering with Ngāti Whātua Rākei on tikanga, so culture and norms, and no change to that. I think it's a beautiful Indigenous culture that we have in Aotearoa, New Zealand. I think that there's so much to still be learnt and to celebrate. So we see a really important role from that perspective, but equally, we're of this place. We have Kiwis who are determined to deliver for Kiwi customers. This is not offshore money, right? These are New Zealanders who are making choices, and we want to make sure that we're delivering the best outcomes for them. A place that I definitely want to see us do more is in the creative sector. I think between the Sky Originals and the 3 commissioning teams, we have a phenomenal opportunity to drive great local stories. And in particular, not just being, they're made in New Zealand, therefore seen in a certain way, to think about how do we support the elevation. We've got a show being done with Great Southern and BBC Scotland called The Ridge, which is coming out in October, and it's excellent, and it has that quality. So what's our role in terms of supporting not just the sporting ecosystem for people capturing that content and delivering it, but also from a creative sector, and partnerships with New Zealand On Air, super important for that. So a long way of saying, Duncan, we're here, we're of this place, and I'm hugely grateful to have the opportunity to carry a little bit of the Sky story for the time that I'm in the role.
Well, I will let you get back to that very big day job now, and congratulations on. A lot of the last 5 years haven't necessarily been easy, but an amazing few months for you, and really appreciate you coming up here on The Fold.
Yeah, for me and the whole team. So ngā mihi nui. Thank you for having me, Duncan.
Seeing is not enough. With optimized data tools and insights, the JC2Co Billboard network helps brands be remembered. Dedicated to closing the loop between impression and action, JC2Co can help your campaign be seen and be remembered. Visit www.beseenberemembered.co.nz to learn more.